Okay, good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, May 13th. Mike Boutros with you on the horn. Great to be with you guys. Full house today. Eman, Jay, Pete, Steve, Ted, everyone in the room. Great to see you. Morning, Mike. Hope all you're in the best conditions. Thanks, Eman. Jay, same to you, sir. Good morning. So, it's been an awesome week. I hope some of you have been able to take advantage of some of these moves. We got the bounce that we were looking for on the dollar at the yearly open, 89.93, and that rebound is now testing initial resistance. So could be the cusp of something new. Obviously, yesterday's inflation data, nice kick to the market. It's all cool, guys. It's just transitory, right? According to the Fed with a 4% inflation print. Nonetheless, we've actually seen markets start to pay attention now, and the inflationary story is starting to get more headlines and all this. What does it mean for the dollar? So we'll hit the DXY today, euro, sterling, Kiwi from last night, Aussie, dollar yen, SPX has been magnificent, crude oil, possible breakout there, dollar CAD, gold, and I do want to take a look at Bitcoin. Interestingly enough, that pitchfork did continue to hold. Did see it break below the median line, and we're testing downslope support today. So we'll take a look at those levels as well. As always, any other questions or trade setups, feel free to throw them on the message board at any time. So let's take a quick look on where we stood on the dollar. Here's what it looked like on the 10th as we were heading into the week. Really tight weekly opening range. We talked about the 2021 objective yearly open, 89.93, right there. We were testing the February low day close and the 786. So this whole region, we're essentially looking for some sort of support bounce. Here's what the weekly looked like into the start of the week. Here's what the weekly looks like now. So we literally registered a low at 89.98. The open comes in at 89.93. Rebound right into former slope or former support, turned resistance, 90.82 into the 91 handle. And that's what we're doing right now. We're right back here. On the daily chart, it looked like this as we started the week. Again, that treacherous spot right there held, and we just ripped right back into resistance. Here's what the daily chart looks like. Really nice move. Really nice move. So where do we go from here? Could see a little bit of a kickback off this level. The ultimate focus is on this pullback and where that finds support. Ideally, you find support ahead of 90.40, the swing lows that you made in April. You got that 25 or 75% rather parallel there as well. Ideally, you find support ahead of there for the next stretch higher. You got the 100-day moving average at 91.07, monthly open 91.30. Here again, here's what it'll look like on the scalp, and here's what it looks like on the 2-hour now. So super clean price action this week. Really objectively clean break of the weekly opening range. Exactly what we want to see. That range held all the way till yesterday, essentially, till we broke higher. And here we are at resistance. March open, 618 retracement, 90.82 into 90.92. Now you're seeing some intraday divergence on the 2-hour with price action making a higher high and the oscillator making a lower high. Again, could see a near-term pullback here. And that's what the focus is on today. So taking a look at this, put some color to where we are on slope, gives you near-term support at the former opening range highs for the week. It's 90.33. Take a parallel of that, extend it to the highs. Resistance, resistance, resistance. Continues to highlight 90.92. So that's sort of the formation, that's sort of the focus I'm looking at right now. It's too early to assume this, but I did want to just show you this pitchfork. If we do drive higher, this is the pitchfork I want to be taking a look at. And if you take a look at that pitchfork, it has us at the median line, divergence into the median line. The pullback should find support again, 90.50, 90.40 max. So another rendition. I don't know if this slope is in play. It's too early. I love the break we got at the 25% parallel there and the fact that we're hitting resistance right now. But the point is, let's see how this pans out. Immediate focus is on this pullback, whether we find support here into uptrend, slope support. Retail sales for the US are on tap tomorrow. We're expecting a read of just 1%. The previous read was 9.8, okay? That's going to be an interesting release at 8:30. 10 o'clock, we get Michigan consumer sentiment read, and that's actually supposed to be quite strong at 90.4. So it's interesting that we're seeing this divergence, right? Inflation starting to pick up while we're getting the reopening trade. I'm not even going to get into the energy pricing and the gas shortage and all this, but as it stands right now, here's the focus for the dollar. Any questions on this? If we pivot break above 90, 92, I'd want to see another accelerated run. You're looking for 91.30 and 91.42. Objective monthly opening range highs. Right? So that's the DXY at this point. So if we take a quick segue and go right over to the euro, where does that stand on that front? So euro on the, just as DXY is at support on the weekly chart, here's euro just ahead of resistance. And this is what I didn't really like about euro. I am still holding a piece on that, by the way, as a disclaimer, but here's the look, right? So on the weekly chart, man, this is just exactly what you want to see. Momentum starting to struggle ahead of 60. I would have loved to see a stretch into the 22 handle. Didn't quite get it. I'll show you the intraday charts in a moment. Weekly chart, there's not much to look at here except support at 120, right? Looks like a possible exhaustion trade. The high week reversal close comes in at 22.18. We haven't even stretched into the weekly open yet, into the yearly open yet, rather. So a little bit different off from DXY position-wise. Nonetheless, looking for that possible topside exhaustion. Here's what euro looks like first on the daily chart and then on the intraday. So for the daily chart, we had this pitchfork that we've been following for quite some time, right? This is off last year's lows. Really nice median line action. We talked about this earlier in the week. The fact that the breakout, the rebound off of the 2018 open, the 38.2, here it is. February high day close 121.68. There's that 786 that we just missed. Here's slope. Daily divergence, price action with a higher high in the oscillator, or the higher high in price, lower high in the oscillator. And again, puts the focus now on the monthly opening range right between 121.68 and the 120 handle. We got 168 pip range. Here's what it looks like on the intraday. So all things, again, taking a step back here on the daily chart and just looking at this objectively, all things held constant, it's been a pretty nice rally, divergent signal into uptrend resistance on the pullback. This is your key support. 100-day moving average, 120.42. You got the monthly open at 120.32. Here's what it looks like on the intraday. So, and here's what it looked like last night. So, as I told you guys, initial downside targets 120.60 and 120.32 into 42, right? 42 is actually two equal legs off the high. So if this is just corrective, it's a really nice spot to kind of find some support there. The May open objective level, again, 20.32. So what, a quarter, a third of the position got taken off on that stretch overnight to 120.60. I'm still break even at 21.20. So if it goes into beyond that, actually, I think I dropped it just above this high. It's just above 21.10. If it gets through that, you know, I'm going to lock in a 10 pip profit or whatever on the rest, and we'll look for repositioning. But this is really the larger level that I'd like to look for support for the euro. Now, again, it's the same game plan that we're looking at the DXY, the recovery that we're seeing near term, the pullback that we're seeing near term in DXY. Here's a divergence signal on the drop into the lows, price action with a lower low, the oscillator with a higher low. That's why the risk near term is for the recovery. Resistance 21 handle, 21.03. Bearish inval is 21.52. That would take me out of the trade, but nonetheless, that's where we're going to have to put our bearish inval. That's yesterday's high. That's slope resistance. So all things held constant, it's still pretty clean. It's still pretty clean. You're seeing a little bit of a kickback here on some of those stretches that we saw yesterday, but the dollar pullback is what we're focused on here in US trade today. Retail sales on tap tomorrow, and ECB monetary policy meeting account. It's labeled as a high priority event risk, but I really don't think you'll get much out of that. That's tomorrow at 7:30 a.m. Any questions on euro? All right, running through these today. So sterling, where do we put it on that? Interesting trade, sterling. I was looking at this yesterday. Haven't touched it. Again, as a disclaimer, I haven't gotten involved here, but the one thing I want to focus on for the weekly charts, for the purpose of the weekly chart, is this right here, and what we do this week in relation to this 30, basically the 140 handle. So you have the 2018 high week reversal close. Twas an outside reversal week. Resistance. This year's rather, decline, 618, gives you 40.24 into 40. We registered an intra-week high at 41.67, but if we close the week below that resistance zone, that would be something remarkable, and it would be the screaming, in my humble opinion, exhaustion trade. So I'm really focused on, for this, by sterling's part, it really is all about the weekly close and how that fares with regards to this key 140 region. So what does that mean for the sterling trade in general? Well, we did come off of really nice, excuse me, near-term resistance at the high day close for the year. That was 41.38. Okay, I had a nice little pivot there, just to higher from a previous swing high that we made in 2018. But really, this year's high day close is all you needed to know. Slope support, former channel support, break, resistance, resistance, resistance. So we just came into it and pulled back. Look where we are. Former resistance now turned support, 140 into 140.24. I want to see inflection here. If we close the week below this, I do think you risk a little bit of a washout trade, just like you got here. For now, the focus is on 140. Low conviction trade. I'm not involved here, but I do want to see what we do at 140. Here's what it looks like on the intraday chart. So the near-term levels have been perfect. If you played the short from earlier in the week, this is where we're at. It's 140. That's where we wanted to close that position. So again, a quick reminder, here's what sterling looked like on the 10th. As we were into that major resistance zone, we said, all right, the high day closes here, upslope resistance is here. If it's going to fail, this is the exhaustion point. Key support, bullish inval, 140. Took a day, took a second day, failure. There's the break below 40.80. There's the drop into 40.20 rather, the 40 handle. So looking for a reaction here. One thing to note, the weekly opening range lows are right here as well. So if you break 140 specifically on a closed basis, objectively, that's going to be a bearish signal. So a little bit risky here for sterling. I do think a lot, some guys might get ripped up here because, again, notoriously traded market, and we're at support, right? We're at support. So look for reaction here. Should see failure ahead of 41 if we are heading lower. Again, looks for 39.19. That's the opening range high for April. Some pretty nice moves here. Again, all of these stretches threatening some sort of near-term pullback, all within the confines of the broader trends, but certainly coming off of trend resistance. You're clear on your UK data until we head into next week. You got the employment data on, I believe that's Tuesday, the 18th. Yep. Any questions here? Clean levels this week, finally. So next up on tap, I have Kiwi. But before I jump into Kiwi, I just want to take a quick note. I've been getting a lot of questions from you guys that you like kind of going through just broader markets, yields and such to kind of gauge sentiment. Here's what the 10-year yield looks like. I've been showing you guys this chart for weeks now. It's been insane. The whole focus on whether we get a daily close sub 54. We didn't get it. Here was the last attempt at a push below 154. It's the 100 off the high. We even stabbed intraday this low into 148 and then rallied higher again. So the breakout we saw yesterday did break downtrend resistance did break and close above the 618 retracement. Excuse me, got to stretch that down to the low now, of the decline from the high. And here we are, the high day close for the year is near-term resistance, 170. Look for a reaction here. Look for a reaction here. So interesting price action that we're seeing here on yields. By the way, you know, I do updates for IG's exec calls once a week, and they were talking about the VIX and how the VIX has been kind of tight so far. Here's what the VIX looks like, guys. We're already, you know, we're already, what is that, 80% off the lows? More, that's not even the low. And it's important for people to recognize, it's a very large misconception that when the VIX is low, nothing's moving. That's just not correct. When the VIX is low, things are moving orderly. There may not be a lot of back and forth. Doesn't mean things are not moving. You could have a VIX down at 17 and a steady march higher, right? This is just telling you how much back and forth action we got. So look, we got the spike. This is the 618 of the yearly range. Could see things quiet down a little bit, but this certainly, to me, marks breakout. You're back above the 100-day moving average. You're back above that former swing pivot, former swing lows from last year. Nice move. Yearly trend resistance, nice move. All I'm saying here is over the next few days, yeah, if it gets a little quieter, sure, keep some powder dry. But I think we're on the cusp of something here, a little bit more of a structural shift rather in sentiment. So just some things to take note of there before we hit Kiwi. That was the 10-year and the VIX. Here's New Zealand dollar. So for Kiwi's part, it's been quite interesting to see how this thing reacted up here. Remember, I'm not gonna lie, this has been messy, right? This and Aussie, my favorite, you know, one of my favorite two trades and assets in general generally speaking to trade, got kind of messy with these breaches of resistance. So here was last week's candle. We closed above the 618 drop of the yearly decline or the yearly range, 72.65. We closed just above it. Real subtle, right? Trendline support, trendline support, trendline support. Three tag touch confirms we broke, we accelerated. Resistance, resistance. Still along that slope. You're still within the initial yearly opening range. What's going on here? Right? Weekly chart, range at best, still looks kind of toppy and tired up there. Kiwi on the daily chart looks like this. I showed you guys this chart last night. So for Kiwi's part, if this is a break of the April uptrend, right? If it is a break below the 100-day moving average, if it is a break below the objective monthly open, which is at 71, what is that? 71.76. We should again see today start to accelerate lower. The monthly opening range lows, guys, comes in at that key support at 71 into 71.11. It's the same exact level we've been talking about since the start of the year. Support. Break saw acceleration, a breach saw acceleration, support, that's your level to beat to shift the focus lower. All right, key resistance at 72.65, 72.87, that hasn't changed. You got slope up there as well. You got the high day close for this month. You got the highs from April, all lined up right here. So all things held constant, you look at a trade like Kiwi and it's simply a monthly opening range right below resistance. But again, the divergence signals that we've been getting, right? So now you have a trade coming off of downtrend resistance, and this is where the divergent becomes helpful. Price with a higher high, the oscillator with a lower high, both reference points closer to 50, pretty strong signal. Here's the first dump. Look for a reaction here today. Need a break below 70.94 to sort of confirm the breakdown. And that would also be an objective break of the monthly range lows. Here's what Kiwi looks like on the intraday charts. So again, a little bit of a recoil, a little bit of a rebound as we're seeing in all the dollar crosses into the open of US trade today. But here's what the trade looked like last night, and here's what it looks like today. Okay, The level in focus was 71.56. You got one more drop in overnight trade to test that slope, divergence. Here's the recovery. Again, at this point, tack on a quick retracement of the weekly range. 38.2 comes in right around 72. Ideally, you'd see exhaustion ahead of this zone. Downside break, again, you're looking for that 71 handle. Huge, huge region of support. Absolutely massive. Questions on Kiwi? All right. Aussie, what does that mean for Aussie? Similar scenario, it's almost the same trade. Here's what Aussie dollar looked like here in our last update as we were sort of coming off of this big resistance zone. So the focus here, let me take you back to the weekly charts. The focus here on Aussie, again, here's Kiwi, here's Aussie, right? Same type of peekaboo just above the resistance zone we were watching. Here it was 78.36 into the 78 handle. You saw that big ripper earlier in the year, outside weekly reversal off it, shifted the focus lower. Monthly, yearly opening ranges have been insane here. So this week specifically, we are poised to possibly mark an outside weekly reversal off the highs. Last time we did that was right here. So it's definitely a cautionary tale. The last time prior to that was right here, right? So a cautionary tale here that we could be, especially if we close below 77 on a weekly basis, you could see Aussie really fall out of bed. Basic slope support off the lows they made late April of last year. Give this thing some symmetry, support, 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 support. It's been tested 5 times. Close below the yearly open, 77.01. Pretty tragic for Aussie if it happens. Hopefully it does. Here's what it looks like on the daily chart. Some clarity here, even more so on this slope that we've been following since last year, guys. This is the same modified slope off last year's low, high, low. Pitchfork support, pitchfork support, support, support. We're right there. 38.2 retracement of last month's rally, right there. The yearly open, right there. The 200-day or the 100-day moving average, right there. So guys, this thing is poised. This is also defined just lower by the monthly opening range low. So objectively, again, a crack below 77 would give you that downside bias. Initial target to be 76.41, 618 of the rally, and back into the yearly opening range low at 75.64. But certainly this is quite important. One other thing that gives us some conviction, sort of that steer towards the possibility more so of a downside break. Well, that's simple. Here's momentum holding 60 resistance. Remember what we always like to say, in really strong downtrends, or generally speaking, downtrend conditions, RSI will typically start to fail around 60. In really strong uptrends, RSI will typically fail around 40. So here's the first time that the rally has started to fail at 60. Every single time it rallies through 60, you know that the uptrend is still intact. Uptrend is still intact. Here's the first time we broke below 40, and now we're holding 60. So even from a momentum study, just looking at the RSI oscillator over the last couple of months here, you can see the suggestive price action that topside momentum is waning here on Aussie. Now, I don't have a slope per se here yet that I want to necessarily get married to, but I do want to show you a couple of different renditions that may offer some fruit moving forward. I don't like this pitchfork. We don't have enough inflection off of any of the interior levels, but the median line further highlights 77. So it's a big figure. It's a psychological barrier. It's a 100-day moving average. It's the yearly open. It's loaded. Look for inflection off 77. Here's what it looks like on the intraday chart. We're there right now. All right. So the initial trade into the start of the week was to look for exhaustion into that 79 handle, to look exhaustion into the upper parallel. You got that turn. the weekly opening range set up just above this key resistance zone that we were looking at last week turned support, and here was the break. What you want to see is what you got. Break of the weekly opening range gives you an accelerated drop. First target 77.54, and here's 77.13 into the 77 handle. We're there now. We're there now. So again, near-term slope is in here. If this is break is legit, okay, you'd want to see this rally buckle around 77.54, 77.64. This 10 pip range here is where ideal scenario for this thing to fail if we are heading lower. April open 75.90 would be a downside target. Now, the only other thing I'd want to say is if this does get a stronger bounce, right? Bearish invalidation by my part, it's 78.25. It's the same top end of the zone that we were looking for resistance. So bearish inval, key support. Whoop, I don't have that 618 in there. I'm sorry. Bear with me, guys. Watch that 618 there. There you go. Some new amended levels. And it's the same setup on all of these guys. On this turn, right, you look to give some description to the decline. If we are to break, you look for a description for the decline. I mean, formation, some pattern here. Too early, but I just want to show you, right? Too early to work with, but looking really clean. The high-low high gives you a pivot at the 75% parallel, instant resistance. Pivot at the median line, instant resistance. Lower parallel converges on that 618 and your 76.69. Let's call it 76.70. So here, something like this. All right. Certainly Aussie and Kiwi flirting with a bigger turn. Let's see if we'll get it. It's number 5. All right, quick touch on dollar yen. Nice rebound, breakout here in early in the week. Here's what it looked like as we were drifting towards that support level at the 618 retracement of the advance off the lows from last month. That was 106.32. Excuse me, 108.32, 106.32. The 618 was 108.32. The weekly opening range set up just below. And again, we were just looking at that downslope, right? If this is a parallel downslope resistance, that's your breakout zone. If it breaks 109.26, key resistance 109.68. It's been a quick short order trade. That was actually the low. Here's the breakout, even in time, right on point. Here we are at the 2019 open, 618 retracement. Now this is the monthly range highs from last month. Oh, from that last month swing, excuse me, in April. And what do we do here? I'm gonna take you back to the daily charts here, show you where we are in the bigger picture. Here's my problem with dollar yen. So momentum's at 60. It's nothing to write home about. There's no divergence, right? This is a higher high in the oscillator, and this is in fact a higher high in price. So you don't have divergence, but you're at 60 on the upside. Big resistance zone. Big resistance zone. 2019 objective yearly open. A 50% retracement. This is the entire decline off the highs they made in 2016. We're right there. So even if this is corrective, the 100's up here. Let me show where it is. So even if this is corrective, the 100's way up here. Kind of converges pretty close to the high day close. That's essentially the risk if we pivot above 109.90. So for dollar yen, for me, it's all about this zone, guys. Here's your monthly open. This is the monthly opening range highs. 618 of the drop, 2019 open. I would stress less this 109.90 level. Watch more so 109.63 into 109.67, this zone right here. This is going to be the whopper, as it were, right? If we breach, close above this zone, I think 110.56 would be just a near-term target. But dollar yen at resistance into the open of US trade today. Any questions? I'm going to need to clean this up a little bit. You can kind of dismiss that pitchfork that we broke last week. And again, this would be pretty aggressive, but just to check out what it looks like. Resistance, support, bullish inval. All right. Some levels to consider there on dollar yen. Pretty big pivot. Pretty big pivot, and we are at resistance here. All right. So, I guess let me just hit dollar CAD real quick, and then we'll move into SPX crude and gold. So here's what dollar CAD looks like. Number 7. Wow, just wow. Okay, let's go back all the way to the weekly charts. This thing has been in free fall. We've been tracking the break ever since the move. Well, for this, actually, it was ever since the move below the 618 of this rally, which was right here around like 124.70s. But it has been quite a decline. So here is our last update. Sorry, guys, was here on dollar CAD. Here is the weekly chart. Again, this was back on the 10th. We had broken that 88.6. We had broken downslope support. Focus levels were right here into the 50% retracement and 119.19. So it was 120.48 and 119.19. Looking for an exhaustion, looking for some sort of reaction off one of these two levels. So the first one has offered a little bit of a pounce. Too early to tell if anything's materializing here. You're at already resistance, which is the low week close from the 2017 decline. That's 121.56. That's your focus range right now for dollar CAD. This is on the weekly chart. Now you're still deep in oversold condition. That's risk, right? That's giving still bears most of the authority here. But certainly the advance. What do you do down here? What do you do down here? Well, before we get into the scalp, here's what the daily chart looks like. And here's where we started to shift our attention. Here's what this thing looked like on the 10th as we were breaking lower. That was that first confluence region, the 50% retracement. Again, this is the 2017 objective swing low. Here's momentum. We're still in oversold territory, so we're not out of the woods yet. But again, focus range 2050 into 2156. Look for a break of this immediate range for guidance. Now, if we drill down into the 2-hour chart and what we've been focused on, this real near-term tight channel did break yesterday. Or it looks, at least as I was writing that piece, it looked like it wanted to break. And here's the push, right? Breach higher, testing as support, first level of interest, 2017 low day close, that's 2156. Looking for a break of this range. It's low conviction. I would like to see this thing rip higher. That's just me. So some things to consider, real near-term stuff. Ready, guys? So here's the weekly open, 2113. Ideally, that's a nice pivot. If we get even deeper into the hourly, max 120.88. So levels to keep an eye on like today. Looking for an exhaustion low off one of these two levels if the breakout is legit. Topside breach, you're looking for 122.47. This is so tight, there's no even attempted formation. I was working at it this morning. I mean, you could work with something like this, but it's just too tight in my opinion. You know what I mean? But there's not really a good sort of set of levels to get out or map out a decent level on this. But focus on what we do here at 121.56 for dollar CAD. Questions on Loonie. Yesterday did post an outside day. It was not a reversal day, but it was an outside day. In fact, it took out the entire weekly range highs and lows in that previous session. So still could get a little bit more of an updraft here, but we'd need to pivot and close above 21.56. Okay, let's get into some of the ancillary stuff here. Can I get an amen on the SPX? This thing was picture perfect, getting messy here, but certainly the drop, and I tried to keep you guys abreast on this on the SB Squawk as well. Here's what SPX looks like on the weekly chart. I haven't showed you this too often, but I think it's just worth taking a look at. The size, the outside, well, first of all, the size of this decline in and of itself, the momentum break below 70. So we talk about these all the time. I always tell you guys, don't get suckered in to these guys who are like, oh, it's an overbought, that's time to sell. Wrong answer. It's the break below 70 that's giving you the indication that the momentum is waning. We're getting that for the first time this week. Also, an outside weekly reversal off the highs certainly puts a bearish tone on that. Now, it doesn't mean that necessarily we're going to go straight into sell-off. We're not going with 39.40 yet, but the risk certainly is there. The last time we made an outside reversal off the highs in SPX, we had one of them right here, which didn't do anything. That was actually an exhaustion trade that took you higher the next day. And the last one was, previous one was here, which only lasted for what, a good 2-3 days before it rebounded. So it's not like all hands abandon ship. Okay, here's another outside weekly reversal into the start of 2018 that saw a decent decline. But definitely the risk is definitely still there, right? Here's another one, outside weekly reversal off the highs, got a decent pullback. So the risk is there from the weekly chart. The daily chart, well, this is what I showed, again, the executive team earlier this week. Luck or skill, I don't know, you tell me on this one, but I was doing the same exact research with them and telling them the last time we saw an outside daily reversal, it happened right on Monday off record highs. On the daily chart, it's much more, it shows a lot more stronger conviction for this being a larger decline. The red arrows you see here are the last 5 times we made an outside daily reversal off the high. Here is one, here's one we just made. Here was one in March. Whoop. You know, sometimes these charts are just a little. Okay, I'm just trying to measure the decline here, but sometimes, there we go. This was a 5% decline. This was a, well, I mean, if you take the first dip, this was a 3%, 4% decline, ultimately ended up being a 5% decline. Here was another one that was a much shorter, 2% decline. This one was also, I believe, a 2% decline or more, 2.8%, but you get the picture. If you take the average of them, the average decline is 4%. So far, what we've done off the high is well over, right? Or pretty darn close, rather, 3.75%. No, we were over 4%, 4.5 off the high. So you get the picture, right? The signal was there. Monday gave us a clear indication. We were looking for breakup uptrend support. We broke that. Here's the spill. 38.2, just the basic yearly objective range is 40.23. You didn't quite get there yet. But on the intraday chart, the scalp that we presented did highlight an interesting level right here into this zone here, 40.67 into 40.80, essentially 40.79. So really nice slope, guys, that held like a charm. That initial rebound that we got off of that May opening range close was perfect into the median line resistance, median line resistance, median line resistance. This is the 1 hour. Here's the 2 hour, just some consistency. And here's what that chart looks like side by side. So that rebound held, Break below this region, straight shots, exactly what you want to see. 40.67, 40.80. That's what we're doing now. Now, what are we doing down here? Again, some strong divergence. Well, I wouldn't say strong, but divergence, price action lower low, oscillator higher low. Right back into the underbelly of that former support. If we breach 40.80, yeah, could see a little bit more of a recovery. Near-term resistance now drops to the May opening range lows. Bearish inval drops to the objective swing low there at 41.50. Pretty clean. Pretty clean. Now, you don't want to get too like married to this slope per se. If we get back into the interior, I would actually still keep the slope. If this resistance level holds and you move lower, dump this, and we'll have to sort of reassert a new gradient off the high from there. But the ultimate focus is what we do around this 10 pip pivot between 40.67 and 40.79. SPX, beautiful levels. Beautiful. Downside looks a little tired. You're at a major support zone here. Near term could get a little bit of a turn. Should see that fail ahead of 40.20, 41.20 if this is still heading lower. But definitely momentum, pricing, time. Looks like you have a little bit of risk for a recovery here near term. Okay, so that is SPX, number 8. Number 9, I just want to hit real quick crude prices. I put a piece out on Daily Effects for this one yesterday. Look, you haven't gotten the reaction, right? Everyone's talking about the pipeline shutdown, and you see on TV, you know, people at the gas pipes or at the gas pumps and, you know, throwing jabs and whatnot, and everyone's hoarding gas. I get it, but it hasn't manifested necessarily in price. And the big zone of resistance that I wanted to highlight yesterday was still the 66.15 level, which continues to hold. That's the 2019 high week close. The 2019 high comes in just higher at 66.57. So the focus of this was like, well, look, we're at resistance. And if you don't believe me, here is the weekly chart. We've been talking about this one for a while. 65.92. That's the low week close for August of 2018. And then the actual stretch low, but you can see this pivot range. Resistance, 2019 highs. Resistance, 2020 highs. Resistance, we did close just above it, but not by much, right? So again, we're right there. And on this rally, we were talking about, well, pay attention because we're at resistance. So for the daily chart, there's not really much to look at here, except one thing. The monthly opening range. Here's your monthly open. Support, slope support, right? Resistance. Very nice range. Very nice range. Here's the intraday. So this was the breakout potential. Here's your weekly opening range right above multi-week, multi-month slope support. This is still the high day close. So pretty big for crude. Look, ultimately, I am a bull on this trade. Near term, I'm going to respect a break of the monthly opening range. Ultimately, I'd like to see a stretch low or a swing low ahead of 63 if we are going to head higher. But, you know, at the end of the day, it's a clear-cut range, and we need to respect the break. All right, questions on crude? Kind of counterintuitive with all the news that's been going on. You'd think you'd get a bigger move here, but not quite yet. Okay, last two. Here is number 10, gold. So pullback here off of uptrend resistance. Again, I don't have anything on this one either, just a disclaimer, but here's gold on the weekly chart. The break above 1795 shifted things for us. That put that 1850 target in view. It's 2021 high week close. We haven't quite made it there yet. seeing some back and forth here. Again, dollar strength is not going to be beneficial for the advance here, but watch where we close the week. As it stands right now, we're mid-range. So I don't really have a very strong opinion. From a weekly standpoint, this thing is just mid-range. Let me put this in the back. Right? Daily chart looks like this. A little bit of an adjustment to that slope that I was working with on the daily chart. Remember, we were working with this. So just take the high, low high, keeps things in perspective. Resistance at 618, retracement of the yearly range. 1850, same level we were talking about on the weekly chart, 1849. Didn't quite make it there. Outside daily reversal yesterday threatened the decline. You're still constructed above 1795. Same zone, again, as the weekly chart. So looking for some sort of reaction on a drift lower towards that 100-day moving average, towards that 2012 high. If we go all the way back to here, huge levels. Here's the near-term chart. Basic slope off the lows, coming off of uptrend resistance. That's all you're doing. Uptrend resistance, pullback, uptrend resistance. Even if it pulls back, stop traffic, 1795. Once again, is your key support zone here. You need to break out above 1855 to actually get the next resumptive move. So looking for a low in gold, right? Here's the thing I don't like. If this was a break of the weekly opening range lows, we should see this thing start to accelerate. We should see it start to drift down lower and give us that strike towards 1750. If we close the day back above 1818, well then, you've got no indicator there. You're just simply drifting just below a key resistance range. So this is where we want to see the VIX start to pick it up a little bit, but all things held constant. You're coming off of uptrend resistance. 1795 key support. Questions on gold? All right, we loaded it up this session, guys. Last but not least, just a quick touch on Bitcoin as we close out the week. What a pullback, guys. Really nice move. This was the big resistance zone we talked about into the start of the week as this thing was nestled. We even talked about the fact we broke uptrend resistance or uptrend support, but what happened? That pullback simply started to drift higher, 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 all into downtrend resistance. So if we clean this up, looks like it could have been just a simple bear flag break. We already took out 4770. 48485 is a bigger level, and it converges on downslope basically into the close of the week. That's what I want to see a stronger reaction is. If that was the low, then a buckle back above 5400 I think would put you back on the constructive path. But all things held constant, man, we are testing quite a drop. Quite a drop. Look for resistance ahead of 5400 if this is, or 54,000 if this is still heading lower. All right. Okay. Any other questions or trade setups? Do let me know. Just a few. Dollar Swiss, Euro Aussie, and Euro Key and Euro Yen marching. So dollar Swiss has been quite interesting for me. So I was checking this out yesterday, but I didn't want to put out a piece because I wasn't thrilled about. Well, let me just take that all back. It's about 90, 90, 90, 80. You guys sick of hearing me saying that? We're there again. We're there again. Okay, this has been the pivot that we've been paying attention to since like July of last year. Breakout, key support. What is it? Breakdown. I've been using this pivot for months, marching. Below the monthly open at 91.21, I'm not interested, or I still think there's a risk for lower move. Now, again, I'm already involved in the euro, so I'd rather be involved in the euro, but it's a very similar scenario. Monthly open resistance, so I'll be looking here. 91.20 is what you'd need to break to mark a larger reversal here. But while below 90, 90, 90, 80, I don't want to touch this thing. Let me just see if there is some slope though. Bear with me 1 sec, Margin. Yeah, it didn't really even have a decent weekly opening range here. Real tight channeling. I don't like to get too granular to this degree, but let me see what this looks like. Hmm. I mean, here's the weekly. Respect that range break, 90 into 90. I'm looking for that 100 pip range break for guidance. There's really nothing to do here, I think, until we clear that range. Euro Aussie, so dollar Swiss, Euro Aussie. Range. Outside reversal off the monthly low takes you higher here, but you haven't necessarily cleared resistance. I'd want to see a weekly close above 56.22. That's going to be the low or the high we close for 2017. Decent pivot in price. Man, wow, that is a contraction into support any way you slice it. Look at that thing. Consolidation. You're at resistance. I would be looking at this very intently into the close of the week. That's pretty big. Now, if you do materialize into a breakout, the basic retracement off the high, how far does that go? Damn. Well, I would just take a retracement just in the near term, decline off the highs they made in October of last year. First target would be 58.42 if it breaks out. But this would need to be a material break, and it would be actually a decent break of the monthly opening range too, but you'd need to see acceleration basically here, Margin. Basically here. The last one, or last two is Euro Kiwi. I'd assume a very similar stance on Euro Key with that consolidation. A little bit cleaner here coming off of downslope support. Similar scenario, you're testing resistance at the 2018 yearly open, which has been a pivot. For some reason, that yearly open on so many crosses just continues to be like a crazy radical pivot. In any event, at resistance, right? So both of those trades are testing a very clear cut and stretched monthly opening range, Margin. Plan accordingly on both of those. Now, Euro Yen is where I expect to see a little bit more of interesting price action, and that is at the 786 already, huh? Here's Euro Yen on the weekly. 786, 132.56. We're there now. I don't think this is gonna work, but let me just see. Yeah, watch Margin, stand aside here. I wouldn't try to fade this if that's what you're thinking. If you're holding longs, watch today's close. If you're able to mount 32.56 on a close basis, I like 34.30 2 equal legs off the high. That's just below, or that's just above, or kind of near those stretch highs they made for the year. You ultimately close the year higher, but right there. And then former slope support, turn resistance. So basically that's like next week, but you're at resistance right now. Let me see what this looks like on the daily. Nice 2-hour outside reversal. This 4-hour outside reversal off the high. Yeah, I think exhaustion. I don't love the setup, but Marchin, a weekly opening range set just below resistance is how I would play this. So basically like a crack below 3160, I'd be looking for a larger correction. 3160 actually also ends up being, or just below, is the monthly open. What is that, 30? 3150. So 3150, 3160, beautiful spot. And it's the weekly opening range lows. But you're at resistance. Let me just add this for you right here. You're at resistance. All right. Hope that offers a little clarity on some of those interesting crosses, Marchin. Otherwise, if there are no other questions, guys, I'll go ahead and wrap it up there. Again, we're light on data. Watch U.S. retail sales tomorrow, except especially on the back of that really, what I see as a disastrous inflation rate. For some reason, the Fed doesn't think 4% inflation is a problem. Again, they're twiddling their thumbs saying it's transitory. We'll see all that, and we'll be stepping this one pace at a time. But check out retail sales tomorrow. 1% read would be pretty, while that is the expectation, wouldn't bode well moving forward into the summer. So keep your eyes on that and Michigan consumer into the close of the week. And I will pick things back up on Monday for the free session on Daily FX, right back here on Tuesday and Thursday, guys. Have a great weekend. Cheers.